The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello, and welcome to the COB on this Wednesday afternoon. I keep getting my days mixed up this week
because you had
of the
Monday
holiday.
off. Welcome to my life. It's quite fun,
Isn't it?
You're Nadine Blaney. I'm Juliette Sali. We are on Fed Watch on a day when the market has seen a little bit of a wobble, down by 0.4% on the CBO 200 index there, and I think the ASX 200 is off by a similar amount, 36 points, 0.5%.
Yeah, it was. Pretty lackluster through the afternoon after this initial sell-off at the open. We had been expecting it, even though we did see the NASDAQ and the S&P 500 hit record highs in New York on mega cap tech. We knew that there was going to be pressure on the material space, and that came to the fruition, as well as the banks. But I will give Westpac an honorable mention for lifting today, up by 0.3%.
Yeah, and Woodside, another good mover as well on that broker upgrade from Macquarie. I think it's up by about 2.5%. But as you say, risk horizon, I mean, anything ahead of the Fed, that two-day meeting, just talking to Diana Messina about that. I mean, no one's really expecting any change for June, maybe July, but we'll see. And then, of course, you know, is there going to be more effort from Beijing, given that you're seeing these persistent weak demand pressures in that economy?
Yeah, I mean, what will they do? The commentary that I've been reading is that further stimulus is likely to come as they try to stimulate particularly the consumer side of the equation in China. And then we've got just big cap pain, really, that's going on in the ASX right now. Even Wesfarmers was down by 1.2%, and WiseTech was off by 2.6%. So there really wasn't, generally speaking, a lot of sectors to hide in today.
No, indeed. So having a look at those miners, just continuing to see a bit of weakness, and I mean that China picture as well would dent some of those iron ore players, as you would expect. Fortescue off by 1.5%. The energy stocks. Let's roll it over to some of the big names there, because Woodside was the standout on that very bullish broker call from Macquarie. They're expecting 18% upside. Santos pretty flat, and Paladin, Boss and Karoon coming under pressure.
Yeah, Wesfarmers down, as you can see. That's a pretty punchy move for Wesfarmers, and I'm just putting it into my watch list to make sure that there hasn't been a broker move or anything coming. Now, I'd say it's probably just soured sentiment toward, well, many in the retail space, but Bapcor, not so, up by 2.6%, second day of gains in the wake of that private equity bid that came through. Look, because I think, generally speaking, the market thinks that Bain Capital will have to come back with an improved offer.
Yeah, I think there was one broker saying, look, you need $6 at least to make sense of this. All right, let's get to the top corporate stories. We talked about Macquarie given Woodside this outperform rating, stating that the market is overestimating climate risks and risks to their commodity and other projects. Woodside definitely a standout today. Bapcor we mentioned there as well.
Yeah, so still, as we mentioned, that US-based Bain Capital, the afterglow, you could say, pushing Bapcor's shares higher. And Super Retail was also a mover. We did have just some C-suite changes. I think there's a new chair that's been announced. I'd say that the move today probably doesn't have a lot to do with that news in particular.
All right, let's get to our guest, Jonathan Takadina from MPC Markets. Good to see you, Jonathan. I mean, we're looking ahead to the Fed, also, of course, all the inflationary prints as well. Your outlook?
The outlook is, so the Fed is more actually worried about the bond market. And we actually had a decent reprieve there. So the yields were pushing quite high earlier on in the month, and now it's pushed back down. So I think they can just be, you know, the market's done the work for them. They can actually just sit back and just go, okay, well, let's not rock any boats. We don't have to be too hawkish, don't have to be too dovish, and we can just let the market play out because the market's done the work for them.
Yeah, I was at a lunch today, thank you Global X ETFs, and talking about the fact that the Fed is in this very unique position right now, first time it's been there in ages, that it can actually just sit back and watch what happens. So all of the obsession over dot plots and everything else for 2024 doesn't matter so much, doesn't it? And when you think forward as an investor, are you happy not happy, but you can handle interest rates higher than they have been in recent history?
Oh, absolutely. Well, I had mentioned this before, like we've had this massive increase in rates, and everyone was expecting that consumers would slow down. But you look around economy's pumping. The non-farms last week was quite strong as well.
Yeah.
So the economy's strong. Markets are at highs. They don't need to cut rates at the moment, and then the bond yields show that they don't really have to shake the market this tonight.
What about when it comes to the market and some of these big valuations, the likes of Nvidia and Apple, which I know is on your radar? What are you thinking there? Is it too much or?
No. So it's a funny situation when so we've got so much liquidity in the system still, okay, and the momentum is. That's kind of like the main thematic that pushes stock prices at the moment. The upward momentum is still strong in these stocks. So while it doesn't make sense from a fundamental perspective, I think people are just going to keep buying them. And if you look at option volumes, I don't know the exact numbers, but I do know that option volumes are still quite high in these stocks. So there's still a lot of speculation, still a lot of fervor in those stocks. And I just think that the momentum is still too strong. I wouldn't want to step in front of it.
Yeah. Liquidity, labor, and leverage, and all of those indications in the U.S. economy looking pretty good. So when you think about how this is sort of translating to the ASX, because we've seen how vulnerable we are here at an index level because of our exposure to the commodities narrative and the Chinese narrative.
Yeah, it just shows, as soon as the US dollar popped up on that move, commodities just turned into the place not to be. So I often say to my clients that the ASX kind of has the memory of a goldfish. Like it just runs from one sector to the next. Like whatever's hot, and money just flows into that sector. Unfortunately, uranium's had its run, gold's had its run, silver's had its run, copper's had its run, and now we've seen just a natural, sort of deflation there. Like we've had this great run higher, and people are just taking profits and kind of just waiting for the next move. And the funny thing about the ASX is that it won't take long. We'll find another sector to push into.
Do you think that other sector could be tech, given the launch of this new tech ASX 200 tech sector?
Oh, unfortunately, our tech sector is still quite small. You obviously compare it to the Mag 7, like Nvidia's bigger than Australian total. So I don't.
That's crazy, isn't it?
Yeah, it's amazing. I would like to say that we do punch above our weight. I mean, like there was talk that the Canva IPO will finally come about. So we do quite well in the tech space. That new tech ETF, I'm not too sure if that's going to be able to push the bar too far.
All right.
Technically, how is the ASX looking to you?
Technically, I think it's just going to keep underperforming the US. The US is the cleanest dirty shirt out of all the world. They have the advantage of having the US dollar as the reserve currency. I think and the election's still there. So technically, I would rather be in the US. Once the commodity sector heats up again, I think we'll start playing catch up. But till then, I think we'll just flounder and go sideways, and hopefully it might drag us up a little bit higher and test those highs again.
So with, 6 months left to go, because I feel like all of 2023 we were saying, the index is virtually unchanged from year to date. Is that sort of going to be a similar story to what we say at the end of 2024 when we look at where we are, we're about 2.5% below the 52-week high now? Yeah,
I think just basically you'll just see rotations out of sectors, movements that way. That's how you can get your alpha, or maybe just sell some calls against some index and trying to get some premium that way. But otherwise, I think we're going to be choppy. We're just going to follow US. So US is going to do okay. We're going to they might lift us a bit higher, but I don't see like the next sort
you
of.
You don't really see the alpha here.
Yeah, I don't see where's the fresh money going to come in. Where the banks are still quite high. Unless there's a commodity run, which is what we had earlier on. If that reignites, yes, I think we can push high. But
what about the Macquarie bullish call on Woodside? Do these energy stocks look like where there's some run to move?
There could be. Unfortunately, it's such a small part of the index that like Woodside's had a great run today, but you can see the overall market's still quite low. So I do think there's opportunities there. If you have a look at the natural gas charts. It's still quite low, but it is quite bullish at the moment. Oil price hovers around that $78 level, so the actual underlying is quite strong at the moment. But unfortunately, that sector is still quite small, and I don't think you see it moving the whole needle.
Yeah. All right. So just more of the same, but a potential bout of volatility tonight, even if we shouldn't be obsessing about the exact month or time frame from an interest rate cut. You think that if if Jay Powell toes the line and he's mildly dovish and talks about being data dependent, like we won't see any major sort of...
Look, I think the risk is actually more to the upside. I really could just see him, as you said, like it doesn't have to be too hawkish, it doesn't have to be too dovish. But I've seen it when he's hawkish and the market just goes, oh, yeah, did you say dovish? I think the market's in that mood where it'll interpret what it needs to push higher from here.
To push higher, and momentum, don't fight the momentum.
Yeah.
Exactly. All right, Jonathan, always a pleasure. Thank you. Jonathan Takadina from MPC Markets. Now, when it came to the stock of the day, it was actually Bapcor today.
Was, because we didn't get a chance to talk about it yesterday. Today, it still gave us good reason to. And joining us was Henry Jennings from Markets Today and Andrew Whiteland from DP Wealth Advisory.
You do have a bit of a track record in Australia with non-binding indicative offers falling over and due diligence sort of getting a bit scary when they do get a look at the books. So I'd probably be happy to take some profits here, depending on, of course, where you have bought them. If you manage to pick some up at $4 and you're now looking at $5.10, $5.15, you're probably a very happy Vegemite. But if you were long at $7, you're probably not quite so happy.
But on balance, sell a few into the bid. Pray that somebody else comes out of the woodwork, and equally so pray that when Bain has a look at the books, they don't get too concerned. The other thing briefly, as I see short interest is rising. So again, people prior to this announcement betting that the results in August weren't going to be flash either. So it's a baseline hold, but maybe if you're a holder, just sell a few just to try and get a couple of bucks in the door.
There you go. That is the stock of the day. And you can catch up with all of our stocks of the day on our website, ausbiz.com.au. And if you just scroll down, there's a whole heap of them there. So some really great stock-specific analysis for you.
Indeed. All right, let's have a look at the leaders today. Healius had a good session. Bapcor we've touched on quite a bit, as we have Woodside. Liontown and Fisher and Paykel also high.
Yeah, there's a bit of a lull in terms of corporate news, but we had some really great conversations as we look at the laggards. I spoke with Mark Whitaker from Investors Mutual, and he gave us 3 stocks that that are allowing him to sleep well at night, so to speak, in the lead up to earnings season. So these are companies that have either already reported or reaffirmed their guidance. And so, you might want to check that one out online. Here's a snapshot. For those of you listening, I'll just say that Boss Energy closed down by 5.6%, DP Yellow off by 5.6%, Nickel Industries. You can really see, to Jonathan Takadina's point, where, a lot of these commodity plays are just coming off, and they're coming off quite hard.
All right, in the small cap space, Tivan looked good today, up 11.5%, Empire Energy, Dimerix, Kelly Partners and Electro Optic Systems, while on the downside.
And you can see Northern Minerals, Metro Mining, Australian Materials and Soraya Resources. So I don't think I need to spell it out for you. But we are all on tenterhooks for the FOMC meeting, widely expected to leave policy unchanged. Unlikely to materially change expectations, Westpac says, although it will be purely heavily focused on the comments about the labour market, of course, in the wake of that NFP read on Friday.
All right, looking ahead to what we're expecting tomorrow on our market. Of course, the jobs number, I was talking about Deanna with that too. We'll have her interview up on the website shortly. Obviously, always volatile, but when we are looking ahead to the RBA next week, an important one. The ASX holding an investor briefing, and then we've got a couple of ex-dividends, including Champion Iron and Incitec Pivot. And I did just want to mention, because I think I just saw a broker upgrade on Champion Iron just in the last 10 minutes. Macquarie hopeful of Champion Iron's prospects and upgrading the stock to outperform. So that's an interesting one ahead of tomorrow. But today down 0.4%.
But I just think Woodside is a great example. I mean, we talk about it in the newsroom a lot, just how, influential some of these big calls and some of these big companies can be on the day, particularly when we're a bit of a news vacuum. I just thought I'd get you across. We did have GDP coming through from the UK showing no growth. So Britain's economic output was flat in April, which was in keeping with expectations. And don't forget, we're moving toward the BOJ on Friday as well. So we've got the BOJ expected to keep rates ultra low, But yeah, whether or not it offers clearer guidance on plans to reduce its balance sheet is clearly in focus as we make our way towards Friday. There's still lots, you know, you might think, Juliet, it's over with inflation in the US and the FOMC tonight. There's never a dull moment, really.
There is never a dull moment. And we will ensure that there are no dull moments when we rejoin you from 9:40 Eastern tomorrow.
We'll see you then.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil,
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible!
1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful!
It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.